Good morning, everyone. Welcome to Dodd & Associates daily briefing on tax changes in the last 24 hours. There have been a number. Let me just quickly overview that and then I'll go into some detail on a couple of items. First of all, the annual Kiwisaver evaluation report has been released. This is prepared by a combination of Inland Revenue, Ministry of Economic Development and Housing New Zealand. And don't ask me how Housing New Zealand get into that act. I haven't taken the time to follow up on it. But it does seem odd, I agree. In addition to that, there have been some amendments to the Kiwisaver scheme itself. Those amendments principally around younger children or children under the age of about 18 from memory, and or temporary workers. If you're employing anyone in that category, you need to catch up on that. A quick call to your chartered accountant would be a good idea. There has been a lot of chest-beating noise coming out of Inland Revenue in the last few days about a survey that they have carried out on tax compliance cost. They are pointing to the fact that for the small to medium enterprise, the vast bulk of New Zealand business, the compliance time and cost and frustration levels have all fallen. I can't help noting the fact that they are saying the average cost for the small to medium enterprise of complying with the tax law is now at the level of the reduced level of $5,557 a year. Makes us very comfortable with the level of our fees, I must say. There have been changes to the emissions trading scheme, and particularly I think those who are involved in some possible movement in forestry rights, although that's only one of the changes, should be checking with their chartered accountant. And another change that has been announced is relating to gift duty. Now, believe it or not, there's an exemption been announced for gifts to the government, or quasi-government as well, for that matter. Now, I find it difficult to imagine that anybody would voluntarily give money to the government, but if you do, you're not going to be subject to gift duty. It's most magnanimous. My concern is with gift duty itself. It was brought in to protect the estate duty regime, and we haven't had that for 10 years or so. So gift duty is very much an anachronism now. There's just no purpose except frustration and compliance cost, because of course people avoid gift duty. They avoid making the gifts that will incur gift duty, but it complicates their lives. Just let me give you a quick recap on that. If you make gifts that exceed $27,000 in any 365-day period, then you're going to be liable for gift duty on the amount by which it exceeds the $27,000 threshold. In addition to that, if you make a gift over $12,000, then you're obliged to send in a form to Inland Revenue to notify them of that fact. So let's have a look at those thresholds, because they have not changed for what seems like forever, certainly 20 years I would guess. I don't recall them changing, and my memory is good for about 20 years, although beyond that I'm getting hazy. The exemption back in 1909, note that, 1909, over 100 years ago, at that time the exemption level, the equivalent of the $27,000, was £1,000, and that was every 6 months, not every year, or in today's IRD terminology, every 365 days, because notice that it doesn't work on a calendar year, it's a rolling 365 days. People get caught by that sometimes. If I go to the Reserve Bank and use their inflation index calculator and plug in £1,000 in 1909, that would today give us what should be the exemption level of $298,000, not a paltry $27,000. So if we combine these things, the fact that there's no longer a need to protect estate duty and the exemption level should be $298,000, not $27,000, gift duty should go. Excuse me, I'll turn the rant mode off and bid you good morning. Thanks for watching our daily briefing. We're here to help if you think we can. Bye for now.